All right, everybody, happy Tuesday. I just wanted to thank you all for taking some time of your day to come and sit in on this class. So, over the last year, we've had several attempts as a team to come up with some educational content to help improve your trading, to kind of give you a little bit more of an edge, give you a better understanding of the tools. And I don't think that the first one's quite started as close to the beginning as we needed to, right? So there are traders of all levels that are joining the platform that are, people that have just started trading within the last couple of weeks to people that have been trading for a few years. And I think that in order for everybody to get, the full benefit of what we're offering, I need to start at the beginning. So today, our primary focus is visualizing and understanding kind of how buying and selling works. And I find that the best way to teach almost anything, especially high level concepts, is through analogies or something that's completely unrelated to what we're actually working on. So even though our goal here is to understand the stock market better, today we're going to be using apples, right? If you can explain something complicated in something that everybody understands, I find that it's a little bit easier to digest. And I think everybody here is well aware of what the fruit is. So I think that it's a really great place to start. So I'm also sorry. Again, this is the first time that I'm running this content, so the visuals here are not what I will be ending with, but it should be good enough to get the point across today. For those of you that have never, heard me speak or have just joined the team at Traderlink, my name is Mitchell DeYoung. You can call me Jarvis. I would ideally like you to call me Mitch. I am the co-founder of Traderlink. I handle the majority of our back-end infrastructure. I set up all the data. I help Geo crunch some of the numbers. I make things look pretty. I've been trading as my primary source of income for about 4 years now. I've been dabbling in the stock market for way longer than that, though, but nothing quite to the level that we are now. I feel like where we're starting, it's good to have, a little bit of hand holding here, right? Like it's very difficult. There's about 600 people that are a part of TraderLink, and as much as I would like to be able to sit down with every person individually and ask them what their experience is, I have to assume that a lot of people maybe don't have the foundational knowledge that's going to be beneficial to them, right? There were times when we tried to run educational content and we jumped right into exposures. And it's very confusing to learn a high level concept when you don't have a strong foundation, when you don't understand kind of the general concepts of the stock market. So that's what we're going to start diving into in these sessions. I think that over the next few weeks, as we start to build up to more complicated, complicated tools, we're going to help build a solid foundation. The goal here is to produce some educational content that if you have zero experience in the stock market, you'll be able to start with these videos and kind of progress forward, get that foundation, and understand the tools at the same time, right? While this is utilizing the tools with TraderLink, the information that we're going to be going over is applicable to anything. Like if there are other platforms that have tools that are similar to what we are going over today, the same principles will apply. This is again like buying and selling, supply and demand 101, right? So if you do think that you already have a strong foundation in the general concepts of why we buy, why we sell, and how price moves on a general level, this might be, a recap for you. This might not be something that you need to sit in on. Otherwise, if you are not really sure of what supply and demand is, or if that's confusing, this is the perfect place for you to start. So the way that I like to learn and the way that I like to teach is we start off with questions, right? We need to have questions that kind of dictate the flow of what we're trying to learn. I think that at a high level, these are what we should be focusing on today and probably the next session. As it's already 5:10, I have a feeling that we are not going to even make it through everything that I have today. But the main questions that we want to go over and where we want to start with our foundation on stock market education is how does buying and selling work? What exactly is price action? How do we view transactions, right? So if somebody is buying, somebody is selling, where do we even go to look to see how this is happening or when this happened, or you know, that sort of information. And then one of the bigger questions is how do we even make sense of all of these transactions? So I'm sure some of you in the chat see me from time to time going over, oh, we have this many data points. This is kind of what we're computing. On a day-to-day basis, we're looking at several million transactions, right? So several million buys and sells of whether it be options contracts or stocks every day, right? It's a lot of information to take in. And what do we even do with that information, right? Like if I dropped you a spreadsheet of millions of transactions and gave you no context, what are you going to do with that? So we need to understand like how to take all of this information after we've kind of found it and can read it and do something with it. How can we make all of this information useful to us? And then another concept that we're going to go over today is volume based on price versus volume over time, right? So I'm sure a lot of you have seen your Thinkorswim charts or your IBKR charts or your TradingView charts and the little volume candles at the bottom of those charts, right? So that is volume over time, right? So it shows a candle for each individual minute or 5 minute or whatever your time frame is there. And what we're going to start exploring are alternative ways to track volume, right? So the three modules that we're really going to go over and start to understand a bit better in this, session or group of sessions is going to be the time and sales module, the volume profile module, and the footprint module, right? So we're not even going to start diving into options for probably another week or two. I think that these three tools, when used effectively, are going to be your quickest way to improve your trading. I don't want people to need to understand the platform and for it to take months, weeks or months to actually see an improvement in your trading. By just leveraging these three tools, very quickly you can start to understand what is happening in the market, and it can become can be a much clearer picture very quickly, right? So after this session, you should actually have enough insight to kind of go forward, and you're able to answer a couple of questions, and maybe you can see what was happening and a little bit clearer than you were previously. So the final question, right, that we're always going to ask, and we're going to come back to this question every single session, right? All we care about, and the only reason that we're here, and the reason that we're using a platform like Traderlink, how can this make us a better trader? Right? That's the main question that we have. That's the one that we're going to kind of roll back to at the end of every session, right? It's nice to understand foundational knowledge. It's cool to understand, what a module is and how it works. Excuse me, I'm a Google slide newbie, so if I make any mistakes, my apologies. But we need to kind of focus on this. This is our main question. How can we improve our trading? How can we improve ourselves? How can we improve our understanding? And how is that going to help us, perform more effectively in the market? Right? All of this is good. You can learn all the information that you want, but if you can't apply it, the value of that information is kind of diminished, right? We need to understand core concepts, but we also need to understand how to effectively apply what we learn to our trading. So I feel like the application side of this is going to fall into a second session. We only have about an hour today, so I think understanding the modules is going to be where we end. But like I said at the start of the class, we are not even going to focus on stocks to start. We are going to focus on apples, right? So if we remove the stock market entirely and you try and explain the concept of buying and selling to a friend, a family member, um, it all comes down to the two sides, right? So we are always going to have a buyer and a seller, and we're going to go over a couple of scenarios, and we can see how this impacts the outcome of the event, right? So, example number one, let's say that I am looking to buy an apple, right? And there is only one person that sells apples, right? So if there's only one buyer and one seller, a transaction only occurs if they agree on a price. And this is again, these examples are going to be relatively generic, but I think that we'll get the point across. So if I'm going into a grocery store, right, and I am looking to make an apple pie or whatever, I'm just going to eat an apple. Who cares? The grocery store, right, being the person that is selling me an apple, is going to be able to dictate the price. Like if I have nowhere else to go to purchase something, the person that has the supply, the person that has the thing that I'm looking for is pretty much in control of the scenario, right? I can't go into a grocery store and, walk up to the apples and buy one, or walk up to the register and go, "Hey, I want this apple for 10 cents." As a buyer in a scenario like this, I have no leverage, right? There's only one person that is selling apples. They get to dictate the price. Now, I can go into the grocery store with a couple of things in mind, and this is going to be an important concept to understand. I know the relative price of an apple, right? So I can go into the grocery store knowing that I want to buy an apple, not know the exact price, but I can go in there and very well know that I'm not going to pay $5 for an apple, right? I can also assume that I'm not going to pay 5 cents for an apple, right? So when we're looking to purchase anything, we kind of go in with a little bit of knowledge, right? Especially when we're buying things that we deal with on a day-to-day basis. You could go into the grocery store and know that if you're going to buy chicken nuggets, it's not going to be $50 for a pack, but you're not going to get it for $1. There's with things that we deal with day in and day out, you have a pretty general idea or a rough estimate of what is an acceptable price to actually pay for something. The ideal, goal here is to feel something similar in terms of stock, right? If I told you right now, I need you to go buy an Apple share, right? Not the fruit, but the actual stock. Do you have a good understanding of what is overvalued and what is undervalued? A lot of people wouldn't unless they're trading that specific ticker or instrument every day, right? So what we need to do is we need to kind of convert this thought, right? We need to be so comfortable with stocks that we're able to apply this same logic, right? So you go into a grocery store and you want to buy an apple. You know that you're going to have to pay whatever the grocery store tells you. There's no bartering, there's no, ifs, ands, or buts. And it is what it is, right? So that's when there's one buyer and one seller. When there's only one seller and you have no other options, you're at the mercy of the person that is selling it to dictate the price. So let's change this scenario up a little bit, right? So let's say I'm still looking to buy an apple, but now there are three different places that sell apples, right? If there's only one person that is looking to purchase something, but there's multiple people that are selling that thing, depending on how motivated they are, they might have to race to the bottom, right? So if I have three people, let's say that we're at a farmer's market and there's three people that are selling apples, those people might have to battle with each other to be able to secure that one buyer. If they know that there's only one person that's willing to buy an apple and they all have apples, well, and let's assume here, just for the sake of the argument, we don't have to deal with this with stocks, but all the apples are the same type. They're all, perfect apples. They're not, going bad. They're all pristine, the perfect idea of an apple here. They know that they're trying to sell whatever they can. They know that I am the only person willing to buy them, right? If they can only compete on price, then if they need to sell those apples, they are going to have to drop the price, right? If there are no people willing to buy, the price is likely to come down. And I'm sure a lot of you can already see where I'm going with this in such a way that it relates to how stocks work. Let's flip that scenario, right? So let's say that there are three people looking to buy and there's only one seller, right? So now we have the inverse situation. There's only one person that is selling this, right? They have all of the control, but there are a lot of people that are looking to buy it, right? When you control all the assets, when there are more people looking to buy what you have than there are sellers, you have the ability to raise the price up, right? If you know there's three people that need apples and your base price is $1, well, you can raise the price. There's nowhere else they can go. They have to buy it from you, right? There is not enough supply for the people that are looking to buy it. And I guess in all these situations, we have to assume that there's only one apple. They only have one apple to sell. The amount of supply is totally relative in this situation to the number of sellers. They only have one apple. It's a great apple. So they have three people looking to buy this thing, and there's only one to sell, right? So we have a shortage in relation to the number of people that are looking to buy it. This has the ability to drive the price up, right? I think what we're always looking at is we're going to generalize that the seller, the person that is getting rid of this asset, rarely wants to lose money, and they always want to make as much money as possible, right? Now the stock market is a little bit more cutthroat than the real world. If you've ever been to the farmer's market, I'm sure there are a lot of really lovely Apple dealers who want to, give you the best possible deal on things and don't want to raise the price. The stock market does not work quite the same way. People that are in control, they want their money, right? They're not just going to be like, oh, well, it's a nice day. You seem like a nice person. You can have this apple at the normal price, even though, there's a bunch of people that want to buy it. Now, they're going to raise those prices as much as they can. It's as much as they can get away with, right? And make as much money as possible. So in both these last two scenarios where there's either more volume on the sell side or more volume on the buy side, there are certain situations where, the price is going to go up. But let's say, like we said at the beginning, that you know, we know that we don't want to spend $5 on one apple, right? If the person that's trying to sell the apple raises the price to $5, I'm like, I'm out. I'm not going to buy that. And then they have to come down, right? So they have to they're trying to find the maximum value they can get for this. If they go too high, no one's going to buy it. And, they don't want that. So they raise it as much as they can. If they go too high, it comes back down, right? So why does this matter? Why does the amount of buyers matter? Why does the amount of sellers matter? What's the importance of any of this, right? So it's the principle of supply and demand that moves the market up and down. If there are more buyers, the sellers can push the price up to capitalize on returns, right? So that means if there is not a lot of people selling, but a lot of people want to buy, then that's how the price goes up, right? You have more people buying than selling, right? That's why you see the general green and red candles, right? On a green candle, it's safe to assume that there are more people buying than selling. And on a red candle, there are more people selling than buying. So when we have more buyers, the price goes up, right? So if there are more people looking to buy than inventory available, the people that are selling are able to increase that price so long as they can get people to buy. Now, the inverse again, if there are more sellers, the sellers often have to sell for less to find a willing buyer, right? If nobody wants to buy something, you keep dropping the price. Like if anybody's ever been on OfferUp or Kijiji, depending on where you are, and you're listing your laptop and you want to get $1,000 for it, and nobody bites, right? You think you can get a grand, you put it out there and nobody messages you. So you go back and you drop the price to 900. You get one person, but then they kind of flake out. So then you drop the price to 800. Oh, well, now you have five people that have gone to, and one of them ends up buying it, right? So when there is nobody willing to buy what you are selling, you drop the price until you find a market, until you find somebody that is willing to pay what you want for what you are selling. So as traders, we need to know the current market for buying and selling, but we can also take advantage of the historical information to help us make more informed decisions, right? So I don't want to ever be in a situation where I am overpaying for anything, especially in the market that we live in today. Food, gas, whatever. You're always looking to save an extra buck. You don't want to overpay. You don't want to go into that grocery store and just be like, "Oh, I'm going to buy an apple for $5 because why not?" No, you want to get a relatively good deal basically everywhere you go, right? So you as an individual, if you're going and buying groceries, if you're going and getting gas, over time you start to develop an understanding of what a reasonable value for most things that you're dealing with on a day-to-day basis are, right? You go to the grocery store enough, you probably have a good idea of the general price of beef or whatever your protein is that you go for, or a vegetable, or your favorite cereal, or whatever it is, right? Over time, because we interact with this stuff on a daily basis, it becomes kind of like second nature. So if you're going in and you're buying a box of cereal, and one day you go in and the price is $3 more, or you go to a different grocery store and it's way more expensive. Like initially, right off the bat, you're like, this isn't how much this normally is, and it catches you off guard, right? We want to get to a point where when we're dealing with the stock market, we've looked at individual, whether it be underlying assets or general options contracts, where we can kind of feel the same way. For me, it's like options contracts at a certain point in the day. I'm like, oh well, this should be around this price. And then you look and then you remember, oh well, there's a news release after, or there's earnings or whatever. So you slowly, and it took me years to see this in the stock market, but you should come uh eventually you should come to the realization of what a good price for a lot of things that you're dealing with on a day-to-day basis are. In my mind, when it kind of relates to the stock market, I tend to stay away from things where I do not have this understanding or I need to do a little bit more due diligence, right? Like I don't like jumping into things where I don't have that uh kind of historical information available to me. I would never get into a trade where I don't have that kind of level of comfort without doing, a fair amount of research first. So we as buyers, right, we don't want to overpay for anything. We love a deal though. If something's super discounted, totally changes our life. Black Friday, Cyber Monday is coming up. A lot of people are salivating over that already. It's like we live for a deal and we hate to overpay for anything, right? A seller, right? So whether it be a Best Buy or a hedge fund or whatever, they don't want to lose money ever, right? They'd rather get rid of something so they're break even than lose money. So if there is no market, will only come down so far because nobody wants to take a loss. And these big boys, when they're taking losses, it's to the tune of millions, if not more. So as much as we like to get a deal, they don't really like to give it up. Anytime we're getting something on sale, odds are that it was already priced in to begin with. A lot of that goes to the same tune for the stock market. Not always, but it's a relatively, similar concept across the board. So what we need to do is we need to kind of historically find an average. We want to know like, oh, well, over the last few weeks, my gas has been this much. And then you go and it's either higher or lower. Like you want to get comfortable. You want to understand historically what we're looking at because having access to that historical price and how it's changed gives you a better base point. It gives you a quicker way to know if like you're overpaying or something on sale. You just don't want to get screwed on the price, right? So we need to understand and kind of figure out how we're going to find this historical price change, right? So how do we actually track historical buying and selling, right? If we're talking about apples still, right, and we're talking about a day-to-day thing, is it possible for us to grab the receipt? So anybody that goes into the grocery store anywhere and buys an apple, right? Are we able to somehow get this information, have a stack of receipts and sit there and, go through and be like, well, this guy paid, let's say, 80 cents for apples, and this person paid 90 cents, and this person paid, 76 cents, and then come up with a little bit of an average. It'd be a pain in the ass, right? That would suck. You'd have hundreds of receipts, thousands of receipts, millions of receipts. I don't know how many apples are sold. I didn't do that kind of math. A lot of apples, right? So you'd have a lot of receipts, and then you'd have to order them based on time, and then you'd have to average them all, and you'd have to know how many apples people bought. It's a little bit tricky, right? Um, as traders, we have something that is similar to the receipt gathering method, right? It's a little bit messy, it's a lot of information, and it's a little bit difficult to sift through. So this is the tape or the time and sales. So there is a ton of information that flows through here. And this is something that we have on Traderlink, but it's also on almost every broker in one way, shape, or form. There's tons of variations of this. But what we're looking at really is each line. I think you guys can see my mouse. Each line is an individual order. It tells you how many shares were bought or sold and the actual value, right? So when we start out, I feel like this is something that a lot of people get stuck in right away. So I started trading and I was trying to leverage the tape. And, I spent probably my first 6 months of trading going through all the individual orders like this, thinking that there was something that I could find. I'm a very numbers driven person. I'm a programmer. I deal with data every day. And this is well before that. But even then, the principle was the same. I didn't necessarily like this method because as good of a memory as I have, we have to remember that whether it be apples or stocks or options, there are, thousands, tens of thousands, hundreds of thousands of individual orders coming in every day, right? So as we can see here, we have about, let's call it 30, 40 orders in the span of 10 seconds, right? So this is right before market close today. There's a lot of orders, right? So we start and we try and get some information from this. We want to see like, are there big orders coming in? Is somebody buying a lot of apples, or is somebody selling a lot of apples? And where is this happening? And we're trying to do this using the tape in real time. And the pros of the tape and the pros of time and sale is that it is real time. So it is as each order comes in, you're able to see it. And it shows every order, right? On our specific time and sales, we have filters, and you can kind of dial in. It's like, do I want to see every order? Do I only want to see orders of 1,000 or more? And that's cool, right? But the cons of using time and sales for me far outweigh the pros. I think that it's cool to have. It's nice to be able to see large orders as they come in. But since we developed other methods, I think that it's too much information at once, right? Like, I don't care who you are, unless you're a computer. I see, it's there's only certain situations where I find that this is the absolute best tool that we have available at our disposal. I think it's great to sit and watch the tape, as you're starting to learn, so you can kind of see how quickly orders come in. So you can see what a wave of buying, which is like these large green filled in bars, looks like, or selling, which would be the same, but it would be a lot of these filled in red bars. But again, unless you're a computer, you're not going to remember what happened 30 minutes ago. You're probably not even going to remember what happened 10 minutes ago. So a lot of people that rely on this, you know, they either have great memories or they're using it just to view a breakout. They want to see when price shifts rapidly. But for us as general traders, as people that are just trying to understand the market, we want an easier way, right? We want a better way to visualize this. Let's say that this is the stack of receipts that's sitting inside of your shoebox. It's a pain in the ass. You have a lot of little pieces of paper. You have to sift through it. You're probably going to forget some somewhere. It's a pain to organize. It'd be so much easier if this information was anywhere but here, right? So then we can kind of move on to other methods of how are we going to track? How are we going to understand where the price is, where it went to, where the most orders are being paid, like, or being filled? Like, what's the average price that people are paying for an apple, right? So then we move on to a tool which I think is great, especially I use this every day. I think that this is a phenomenal tool, and I think that all new traders should be going here almost immediately, right? So when we start trading, we see our candlestick chart, and I don't have my broker up, so I can't really show this, but I need to make a note real quick. So we see candles, right? And at the bottom of the chart, we see volume. And it lines up with that candle, and it's like, oh, cool. So in this 5 minute, we've had a million volume, whatever. And that's great. We know that there's a lot of volume in relation to other candles, but we don't know where that volume occurred. And that is actually the most important thing to understand when it comes to trading, right? I don't really care that over 5 minutes we've had a lot of volume, because that can mean a lot of things, right? Like, is that volume coming in at the top of the candle? Is that volume coming in at the bottom of the candle, right? Like, just understanding that there is volume is really only answering half of the question, which is, what the hell is happening inside of that candle? This is why dealing with volume for me, based on price versus time. So price would be, this is the makeup of the candle, and the bar that you see on the bottom of your broker. I'm just gonna jack this here real quick. We're gonna copy this image, just toss it in here just so I can, and then we'll delete it. So the volume here, right, is showing that in this candle, and he circled it perfectly for me. So we're going to look at this. Is it, it looks like it's 2.5 million, right? That's great. We know that there's a lot of volume here. There's way more volume in this candle than all of the preceding candles. Mind you, it's end of day, but great. There's a lot of volume here. Where did that happen? Where did this volume happen in this candle, right? This is almost one of the main reasons that I even wanted to dive into Traderlink to begin with, why we even started this. I think that brokers are not supplying you with necessarily the information that you need on a day-to-day basis, right? Volume over time is cool, but it leaves so many questions. Like, and let's assume that this candle and what I'm going to go back to on volume profile, they're one and the same, right? There's a ton of volume, but you don't know where that volume is, right? If all that volume is at the bottom of the candle, then it kind of shows that we have a little bit of support. But if all that volume is at the top of the candle, then it's a resistance, right? And this doesn't show you that, and you're just looking at the candle, and if all that volume happens to be at the bottom but the candle's red, you're like, oh, it looks like we have a lot of selling, all that volume is there, but you can't really dive in and see that all that volume is actually closer to the top. So even though it's a red candle, it kind of looks more bullish than anything, right? So when we're reading volume profile, versus just volume over time. What this does, and I'll explain how ours works specifically, is that each price point, and you can see here we're dealing with SPY. Each price point has, for every order that goes in at that price point, the bar grows, right? You can see that this scale isn't out of volume, but simply to one. So this is called normalizing math, right? So the largest bar is always going to be one, and then every other bar on this chart is in relation to the largest bar, right? So the actual amount of volume is not displayed unless you hover over it, but you're still able to very quickly see where the highest volume is and kind of see where there are low points of minimal volume. In this specific case, places where nobody was buying or selling is gray, right? So this is actually a very good example for this because our largest bar in this example is right around, let's say, 597.3, which is right where our spot price is, right? So this is lovely. So in this instance, let's again assume that this is a chart that showed that last daily candle. We know that the spot price is right where the average volume is, or right where the most buys and sells were. This makes sense, right? So remember when I was telling you that nobody wants to overpay, and we always want to deal. But the people that are selling to us, which are the market makers, the banks, the people with big positions, they don't want to lose money either. So as much as we like a deal, they don't want to give it to us. So knowing that, we need to kind of know where the average price is. Where's the most volume, right? Where is a price point that I can look at and go, hey, I'm not really getting cheated. I'm not getting a deal, but I'm not overpaying, right? So this is where volume profile and horizontal volume comes in, right? So again, in this instance, 597.3 is at one, right? On our volume profile, one being the highest that you can have, one being the most volume at that price point. And our spot price, so SPY stock is at 597.335, you know? So we're 3 cents, 3.5 cents over what I could say is our, true price, right? The price where the most people were doing transactions, the price where, everybody for the most part was saying, okay, cool, I'm fine with buying this. And this is important to me because when I'm looking at volume, I am way more comfortable purchasing something or going in when the price is around the average, right? I wouldn't want to go in and necessarily buy at 599.3, right? There's not a lot of volume up there. And that's, $2 more than what our average price is, right? I want to pay, the middle of the road price at the very least. I'd love to get a discount, but I'm not trying to buy when you know the price that it's going for is way over where the majority of people paid. That's what it boils down to. And the difference between this and this, like this information is all the same, right? Between the time and sales, the volume profile, and the footprint chart, right? This is like, let's say this is the individual building blocks, right? This is each individual order. We take these orders and we group them up. So we take them out of our shoebox of receipts and we file them, right? It's the same information, but it's visually different, right? We could include the price on here if we wanted to, like there's some of this information that doesn't directly carry over, but it's essentially the same. We've gone in, we figured out the price of all these apples, right? And we've taken it from our shoebox, we've scanned them into our computer or typed them up, Lord forbid. And now we can do something with that information, right? We've categorized the raw data, the raw transactions, and now we can kind of form a picture. Like if you're looking at this chart, you're going to go blind, right? If you're looking at the time and sales and you're trying to have it dictate, the average price or, where should I buy, where should I sell? Sure, you might be able to see it if there's a lot of orders that come in at a certain price, but I can guarantee that you're going to have a way easier time trading if you just try and see where the average price is already. Go find the largest bar on volume profile and just wait, right? Wait for it to come back to that. And that's your reaction. Everybody that's starting trading wants to find a level, right? Everybody's obsessed with, excuse me, drawing lines and figuring out support and resistance. I can promise you that every single time we're approaching, whether it be above or below this bar that's at one, you're gonna have a chance to enter, right? Every single time, because the average price is going to be the price where you expect a reaction. Like if we fall under that, that's where we can get a sell off, right? Because all these people that bought above are trying to, stop the bleeding. So we can definitely dump, and nobody wants to buy something that's coming down too hard. Or the inverse is if we start to see a bunch of buyers come in, well, that bar can start to move up, right? So if you just want the easiest thing, you want a strategy that you can implement tomorrow, pull up volume profile on SPY and just watch and wait. Obviously, right when the market opens, that bar is going to be moving all over the place. Give it 10 minutes, wait, find out which bar is at one, and then just wait for the price action to go there and see what happens, right? I can almost guarantee you every single time that you approach that high volume area, you're going to see a bunch of action start happening, right? Like you always talk about getting caught in the chop, not knowing where to buy and sell. Just go where all the money has been. Where is the majority? Where are the most people buying at? Wait for that, right? So the pros of the volume profile, again, it's still real time. It shows all orders. Like I said, we're just taking our receipts and we're filing them, right? So it's taking all that raw data and just making it visually easier to understand because there's no way, unless you're a robot, that you're taking this information and in your head creating some sort of chart. Like it's impossible. Um, we're historically able to track orders at a price, right? So right now, this is just taking the last 24 hours. I'm going to set it up to be able to select your own time frame, but basically, it's like, oh, well, where's the volume out of the last day? Right? That's what I was looking at when I was using it. We can change that and make it a little bit more granular or whatever. But the main concept is we're looking at where was the buying or where was the selling, where were the transactions over time, right? And this lets us very quickly answer the question: are we overpaying? Nobody wants to overpay. Let that. I'm, an avid thrifter just for the fun of it. You like to see what you can get. I buy things from wherever, but I don't want to pay more than I have to for anything. Gas, food, um, clothes, shirts, whatever. You're going online, you're always going to try and find a deal. Is there a coupon code? Like we don't want to spend more than we have to. I don't care if you're rich, poor, doesn't matter. Like you don't want to spend more than you have to, right? So this very quickly lets us understand, like, are we overpaying? If we are well over the largest bar, the bar where there is the most volume at that price, then it's safe to say that you are currently in this last time frame. So in the last 24 hours, you're overpaying, right? You're paying more than where the majority of the action is. There's some people in the chat. Okay, yeah, you guys are talking about that. Oh, uh, so the cons of volume profile, right? With ours, and there are some chart providers that do have this for every single candle, and we've looked at that, so we might be able to do that too. I think that the footprint basically covers that for us, though. It does not track the change like over multiple candles. It just shows an individual time frame. Again, this does not show change over time. It's something that is just us, just our system right now. And that might not always be the case. The current volume profile, and again, this is something that is going to change in our next update. It's only tracking overall transactions. It doesn't break it down into buying and selling. The new system that I have that we are working on, will have the ability to actually break that down, so we can have a buy, sell, bid, ask, mark volume profile, which is cool. So that takes over both of those issues, and it's not as useful on smaller time frames, right? So there is, like anything, an issue with granularity when we're talking about the stock market. I always tell people I'm way more likely to get a prediction right if you're asking me to tell you what happens in the next minute versus the next hour, the next day, the next week, the next year. The smaller the time frame that you are trying to guess on, the higher chance that you have enough information to be right. The longer you have to wait, like the more complicated things get. I find that for volume profile, like if I'm just going to look at, if you take it down to the absolute most granular level, it's this, right? So you still need to be looking at, I'd say, the 24-hour time frame, at least an hour, to get a good understanding of what buying and selling is. Because if you're looking, let's say you're looking every minute, You're not going to get a whole lot of information. So you want to look at it over a relatively decent amount of time, at least an hour. I like 24 hours. That's going to be a personal preference to everybody. But smaller time frames like the 1 minute, the 5 minute on volume profile, I just think that it gets too busy. Right. Then at a certain point, if you go down small enough, you're just looking at the tape again, which is what we were trying to avoid. So we've seen two. Now we can kind of go on to, oh no, I didn't change it. Sorry, my bad. The blooper reel. Don't mind me. And do I have this twice? What the heck? All right, back to our regularly scheduled programming. So after volume profile, right? We have one other chart, which is the main thing that I use. If I'm doing anything with Traderlink, it's almost solely with footprint and volume profile for me. So we can dive into exposures, and that's also very important. But for like actually entering trades, it's these two, and that's basically it for me. So the footprint chart is a combination of the tape and a variant of volume profile as well as a candlestick chart, right? So remember when I was telling you the initial issue with candles is that, I could see a red candle and I could see the total amount of volume, but I have no idea what is going on inside of that candle, right? That is a problem for me because it leaves me with more questions than answers, right? If I don't know where or what price the volume came in, or if it was buying and selling, I don't know. I just know there's a lot of volume. It really doesn't answer all the questions that I need. So when we deal with footprint, it takes everything that we love about the volume profile and everything that we already kind of liked about a basic candle, right? We get the high, low, open, close still, but it goes in. It's like imagine that a candle's a package, right? You get something from Amazon and it comes in a box. And you know the general shape, size, of the box, and you're like, wow, I'm really happy I got a package. But you have no idea what's inside. Somebody sent it to you. You have no idea what's in there, right? That's concerning because what's in the box, right? What are we looking at? What is inside of this thing? It's kind of important, right? So the footprint is like having a package, but being able to see the contents of the package, right? We it's cool that we got a package, but without knowing what's inside the box, it really doesn't give us much value, right? We know again the shape, size, the weight, whatever, but we don't know what's it composed of, right? And the footprint kind of gives us the answer to that. The footprint allows us to dive in to the candle and see the volume that we were kind of wondering where it was placed to begin with, right? Like it took me a really long time to realize how important this was. I probably traded options for 2 years before I really dove into the concepts of volume profile. And when we're looking at that, we need to understand why we're looking at this stuff, right? So new traders, if there are any of you in here, you're just getting started, it can be very confusing to find what you'd consider to be a support and a resistance, right? If you look at this and you just go to the largest bar where the most action has occurred, you got that, right? Come down, wait for that, and then go from there. But then we need to see what's actually happening at that price point. Right. So we always say that we're waiting for confirmation, that we're trying to understand what is happening once we have these levels. This is the tool that I use to determine that, right? Even with exposures, you're building a support and a resistance, right? You're finding a level that you want to go to, or a level that you want to bounce off of, or you're finding a level, you're finding a place of interest to you. But even if you're using that, you need to have a way to execute, a way to kind of understand what is going on. What is the price action doing at that level? That's always the second question, and that's usually where a lot of people get tripped up. Um, because they don't know how to react, right? So if we're let's say again, let's go back to this screenshot here. I'm just gonna paste this bad boy in one more time. All right. So let's say that we're looking at this red candle again, the one that had a lot of volume. And I think that this actually lines up with what I have under here. No, I was a little late. Um, let's say we're looking at that, right? And let's say that this blue line where we have resistance 25.28 is a place that we want to know what is happening there, right? We already had this level from somewhere else. Who cares? We need to know how this candle is reacting to that level, right? And just looking at the candle itself, this is where a lot of people get faked out, right? Even if their levels are right, they misinterpret the candle, and it's not because they don't know how to read the candle, right? If you just have a high, low, open, close, or you have a red candle or a green candle, you probably read the candle right, but you didn't read what was inside of the candle, right? So you having the footprint, let's blow this guy up. Sorry, it's a little small, allows you to see the makeup of what is happening there, right? There are a lot of times where you'll see something like this, and we come down and you see a big wick up, and a lot of people that are new to trading go, hey, we bounced, right? We've now formed a doji, we're probably going to bounce up from here. And you see that day in and day out because they don't know what's inside of the candle, and they're just going based off the fact that, oh, it got bought back up. Now we, being the smart individuals that we are and having access to things like the footprint chart, you see that there's still a lot of selling going on down here, right? So if we saw a lot of buying, so these green bars, right, down below, we'd be like, oh, there are a lot of buyers, right? And maybe we are going to bounce. But in this case, it's kind of a mixed bag, right? Green, red, it's Christmas. Christmas down here. We're not seeing, a lot of green, a lot of red, nothing. So that's the composition of this, and this is what we're already running a little late. This is what we're gonna go over is the actual application of this stuff in the next session, right? How can we take all this information that we've visualized? I'm gonna move this back, go back, right? And how do we use this to, once we have our levels, to make smarter choices? How do we, you know, get ourselves to a position where we're not getting faked out as much? Can we just use footprint and volume profile and trade effectively, right? How do we start to implement this into our day-to-day trading? Because if you can read what is happening inside the candles, which we all have access to it. So this is the delta chart, this is the bid ask chart, we all can see it. Um, if we can see what is happening and we know the levels to watch, right? All we have to do is see how these candles are reacting at those levels, and then, just react accordingly, right? Every level that you get, whether it be one from the volume profile or an exposure, and I'll die on this hill. You should never have a buy or sell bias. You should never have a call or a put bias at any individual level, right? All that this price is telling me, all that this one bar at 597.3 is telling me, hey, something is going to happen here. And that's it. Once you have a level, you need to be able to plan for the upside and the downside. And the sooner you get that through your head, the better off you're going to be. You'll remove so many terrible trades without, like, just eliminate a bias entirely. Because once we have a plan for what happens if we go up or what happens if we go down, then once we get to that level and we're looking at our footprint chart, all we need to see is, oh, are we actually selling through that level, or are we actually buying through that level? And then you just follow that, right? You have both paths, like the multiverse. You plan for both things to happen and you're already prepared. And all this is going to tell you is, are there actually a lot of buyers there? Are there actually a lot of sellers there? And then you react accordingly. The likelihood of you getting faked out is significantly less doing it this way than going in and just being like, oh, 597.3. We need to watch that. Looking at just a regular old candle that looks like a bounce, but all the volume is actually selling, and then you've only planned for calls, so now it actually sells through, you're in calls and you didn't look at the candle. Like, there's so much that we can avoid just by any trade that you're about to take. Look at the call side, look at the put side, same time, and then just looking at the actual price action at those levels, right? So I'm going to pause it here, and I'm going to answer. I see that there's some people in the chat, so I want to get to a couple of questions before I have to hop off, and we will continue through this. I will set a date. It'll probably be next week, and then next week I'll start running 2 sessions a week. So yeah, I didn't quite. We're at slide what, 15 of 20. So we did a pretty good job. Going forward, we're going to start to go over a little bit more on the application side of things. There's a little bit more on footprint we're going to cover before we get there, and then whether it be next class or the class after that, we will go over, how are we going to apply this to our trading? What are some examples that we can see? And I have to actually take some recordings of real trades that I'm taking to do that, where we can see, how to effectively incorporate this and, you know, go forward from there. So I hope that this at least, scratched the surface. If you have not used the volume profile and you have not used the footprint, I think that this should be convincing enough for you to start. With the current system, I think that SPY and SPX are basically the only ones that you can use on footprint. In the next week, we should have that whole basket of tickers that I posted in the announcements channel. So it's going to be, I'm really looking forward to rolling that out because this tool is great. It's even greater if we can use it on more, spoiler, on more tickers, right? Let's pull this up. People talking about price doesn't always gravitate to the highest bar, but it does tend to come back to it. It's like VWAP. Like a lot of people, it deviates and then it comes back. Like it will come back at some point. So somebody asked the large bar on volume profile. Come on, work with me here. So this is the high volume node, right? If we're talking about actual volume profile terms. So this is the place where this is the most. Where it is one, there will only be, unless there is the exact same volume in two spots that are the highest, there will only be one bar that touches one. I should maybe highlight that bar just so you can see it. So that is the price point where the most volume has been exchanged. Whomever made these lovely slides, thanks, Noakes. Yeah, my slide making skills, if you couldn't tell, are not the best, but I'm making progress. The final version of this will be much nicer. I actually jacked a couple of people's screenshots for the candlestick slides. I did not make that, as you can tell. That's not up to my standard, but I was desperate. Um, What is over and undervalued? So if we're looking at a period, like I said, this is over the last 24 hours. Overvalued is prices that are higher than this one bar where the most volume was exchanged, and undervalued would be under that, right? We're saying here, we're making a generalization that the highest point of volume is kind of like the accepted price. Obviously, people were cool with buying up here, selling up here, buying up here, selling down here. But this is the where the most volume was exchanged, so this is the most acceptable price. Volume profile is for SPY. SPX does not have volume profile because SPX does not have volume. Uh, so that's the even the volume profile for SPX is derived from SPY. So I take the SPY spot price, the SPX spot price, and then convert SPYs over to SPX. Um, you can do it for that. Footprint only works for SPY because SPX has no volume. I did not convert it there because there's a lot of data to convert. But you could type in SPX on volume profile. It is just a SPY. It's going to look the exact same as SPY, but the numbers are going to be converted for current SPX price. Jake or Mike? I don't know what you mean. Who's Jake or Mike? I don't know a Jake or a Mike. Oh, ah, that's a good question. I gotta go with Mike Tyson for being real. Come on, he looks like a monster. So market tide. That is going to be pushing on this next update. So I have a couple of loose ends I need to figure out with our data provider. It's running on our development side, but I don't have it pushed yet. There's just a couple of things I want to make sure that when I push tools that they're running great, and we're pretty close there. So I'm excited to have that. Favorite tools to use if I had to pick five from Traderlink, I would say volume profile, footprint. I like the Gamma Flow. I mean, I'm a little biased because I made a lot of the tools. Gamma Flow is great. I like DDOI. I like the unusual. I don't know. I like it's hard. I use a lot of them. But as far as exposures go, I pretty much Gamma on a charm. But for me, for entering, I'm always one thing that I'm always looking at, right? Because all those other tools in my mind are just to determine levels. right? And like I stated, a level is just a point where you want to look for reaction. Doesn't necessarily mean that I'm in a short or long there, unless it's like, all-time high, then I'll look to short. Um, but once I go into actually entering, I'm looking at volume profile and predominantly looking at footprint, right? That's why I'm so excited to roll this out for multiple tickers because when I'm there, right, when I'm at the level, I just need to see how the buying and selling is going, right? That's what I want to know. If you have a level, that's only part of the equation, like once you have a level, you need something to happen there, right? And you can't assume that we're just going to bounce and you can't assume that we're just going to sell. So once you have that level, this is what I'm looking at for actual execution. I'm trying to see how's the price reacting? How are people buying and selling once I hit that level? And then that's what I'm gauging my entry off of. Spot price here is, yeah, pretty close, but not, that's just happens to be this screenshot. Yeah, so a lot of people, and I'm not somebody that swing trades very much. So the way that I leverage this tool, I trade 0 DTU 1 day and like 3 or 4 day. But I only trade 3 or 4 day just because the volatility is less. I don't really take trades. If it goes in my direction, I'll hold them, but I'm not taking trades for weeks or months out. It's just not really my thing. I like to have my capital back on most of the accounts. So I probably would not be the best person to ask about, finding a specific swing trade. I know that Geo does swing contracts using this information, and he just does the same thing. All you're doing is finding levels, right? You're finding level. If you put in the time frame on your Gamma or your Vana or whatever, and you put it over a week, like that's basically the time that you want to execute. Like the dashboard defaults to daily because most people are trading on that individual day. If you include more data, right? So you set the time frame to a week, 2 weeks, whatever. That's kind of your time frame. Now you just have to be aware that as time goes on, that data will shift, and that's the only thing to watch out for. But I mean, the concept is the same, right? Like if you see over a weekly time period that there's a level, and then you go to your footprint and see that there is buying, you could hypothetically enter a swing trade there and try and hold for the other level. And if you break that, you're going to sell, right? Same, but different. All right, everybody. I hope you have a wonderful Tuesday evening. Thank you for joining. I will be getting this up on YouTube as soon as possible. I hope you guys all learned a little something. If you could just drop me a comment in the chat, let me know what you thought, how your feelings were, if you took anything away here, if it was a total waste of your time. Anything is helpful. Build my self-esteem, tear me down, do whatever. And I will get this up as soon as possible, and we will continue this next week. Thank you all for coming out, and have a wonderful night.